Hi everyone, this is Rob Roy and welcome to the Elliott Wave Elite US Market Update. Before we get to the charts, wanted to wish everybody a very happy new year. Hope that 2019 is a great and prosperous year for everyone. In our post-Christmas recording, we showed the chart where we are now in a wave 3 to the downside in the S&P 500. We'd had the big sell-off on Christmas Eve that was a little bit unexpected for me. So we have the wave 4 forecasted bounce high and then the wave 5 target. And we discussed that in detail. So I'm not going to go through it again this week. If you want to go back and watch last week's recording, if you haven't already, it talks about that. But I will go ahead and draw the zigzag chart on here where we had the quick 50% corrective move followed by the zigzag pattern to the downside, the wave C following that correction. And what's interesting is when we were talking after Christmas, had the big up day on the 27th and 26th, excuse me, and we were wondering if we were going to go up and retrace and test the 61.8% level, the 100% level, or if we were going to retrace it all. I actually showed you a chart where we went straight down on the NASDAQ to the 261.8% extension following September 11th of 2001, the 9/11. So there was some doubt there, but I did mention to you that our plan was if we came back up and hit this 100% extension, we would go ahead and initiate a new SPY put debit spread with the idea or part of the plan that if we did continue up all the way to test the 61.8% level, we would take off the short puts and let the long puts run back down. If we didn't hit that level and turned around and came back down, we would initiate one on the break of the 161.8. If we turn around from here, and we will likely open on Thursday to the downside following the close on Wednesday in the U.S. markets. Apple came out and warned. It was a surprise warning. They actually halted the stock for a while, and when it reopened, it opened down about 8%. It brought the futures down with it when they opened. So at least at this point in time, it looks like we're going to have a big down open, but we had a big down open today. And Wednesday's market, we opened down nearly 400 points and it rallied back to close just slightly positive. We still don't have everybody back. All the traders aren't back here in the U.S. markets. The full volume will be back on Monday. Some people are still taking the rest of the week off, so it's a little thinner trading, but we'll show you the volume in a minute. But the bottom line is we did come up and test the 100% level as what normally happens when you have an extended C wave. So now we wait and see, but we have our plan in place and we followed our plan. And just real quickly to point out that the wave 4 is right at the 60, or the wave 4 forecast, if we continue higher, I should say, is right at the 61.8% level. So if we went up and tested that, we would hit that target dead on the nose. And then look where the wave 5 projection is, right around that 261.8% extension, which is what we expect if we continue lower from here. So taking off the big LA wave program, you can see clearly here that we have tested, we have hit that level, the 100% extension, and we're waiting to see how things progress from this point. Be interesting to see how the market handles Thursday, if it's able to rally back as it did on Wednesday. So here's the SPY bringing volume into the mix, as I mentioned, and you can see how volume has fallen off here a little bit. I got a feeling that's probably going to be a little different tomorrow based on the severity of not just Apple, but across the tech sector, all the suppliers, everything's down after hours that has anything to do with technology. So again, be a rough open on Thursday morning in the U.S. But note that the volume is a little bit less, and that's, again, a lot to do with the fact that all the traders aren't back yet. And then we highlighted the Christmas Eve volume, which was unusual. Again, a lot in the last week's recording, so get caught up if you're new. Looking at the VIX, we have come down in the VIX today. We moved to the downside with that big rally into the close, and we'll see how that plays out tomorrow as well. We did open with higher volatility and then basically just came down throughout the day, but we still stay elevated above the 20 level, but we were at 30 around Christmas, so a little bit better. One thing I wanted to bring into the mix here, again, is TBT and show you interest rates. Remember, this is inverse. of the 20-year Treasury. So when this is going down, it means rates are going down. So it's the prices and rates are inverted in this. So rates are going down, prices are going up, is what this shows. And pretty interesting here, the yield curve on the 2s and 5s that we had showed you a while back is still inverted. Even as the rates go down, the curve has stayed inverted. The 2 and 10 is not fully inverted yet, but boy, it looks like it might soon. But this is crazy to me to see this, but it really shows the fact that we've had such a big down move in the market and money is running to hide in the treasuries, but it's also now starting to weigh on the dollar. As you can see here, we did rebound today, but the dollar opened and was down early, and there was a lot of people talking about if we were to break meaningfully through this little support area here, you could kind of draw the line down a little bit more if you wanted to bring these highs into play over on this side. And anyway, right in there is the support, and it looked like we were going to break down in a big way, but then as the market rallied back in the afternoon, so did the dollar. But the dollar's off its highs, and one thing that was a bit troubling was I read a news report that money had moved in. Now this was towards the end of the day, but money had moved into the Japanese yen as a safe haven. And I started thinking, well, if we ever get to the point where the U.S. dollar is not viewed as the de facto safe haven currency, boy, what would that do to the markets? So the dollar's something to watch. Again, even if we break that level, we still have a lot of support back here. So we got a ways to go before a weak dollar would start to spook people, and some people think that it'd be good for the equities markets. A lot of times it is, but in this scenario, I'm not so sure that that's exactly where we are. But we hadn't looked at the dollar in a while, so I wanted to bring it back up. Our current case studies, again, we have the SPY put debit spread. You know the plan there. We have the Texas Roadhouse Strangle that we put on, and we are testing the breakout level, as you can see clearly here from the support line. And going back, you can see again how that was resistance, just to bring you back up to speed for a while. And then we broke it, and we came right back up and have tested that line. We'll see how this handles a weak tape tomorrow, if indeed we do finish to the downside. So we broke down, we had a downward breakout, we've come back up, we've tested that, but this one we have plenty of time because this is such a big descending triangle. So sometimes these huge triangles break fast, sometimes they don't, but they usually break big, and that's the fun part of this case study. Now, something else that I wanted to show you, which is really interesting. We don't do this very often, so I thought I would go ahead and show you this today. Here's a chart of gold. Let's look at the big Elliott wave pattern on here, and you can see how it's kind of going sideways. Now, this is the weekly chart of gold. If I bring in the daily chart, it looks a bit different, but I thought I should bring one up just to show you, and then we'll come back to this weekly chart. There's the Elliott wave here, and it shows that we're in a wave 3, a strong wave 3 to the upside. Look at the DMI to confirm it, and the DMI is showing that yes, indeed, that is a strong wave 3 that's moving to the upside after this really long base that we had here in gold. So from there, it looks like the breakout has already occurred. You can see the little triangle here that had formed, and then we get the breakout move to the upside. But if we go back and look at the weekly chart, again, just from first blush here, we have it looks like a wave 5 to the downside, but we're meandering sideways here a bit. If I take off the big Elliott wave pattern, look at this huge triangle that we have here on the weekly chart. Now again, this is pretty long term. We're going years back, but that's a massive triangle with a huge mouth. But look how many touches we have on the line from a weekly chart. When we come back over here, and you can see that we had a basing here for a while, and then we broke out of it, came back down, tested it, and took off, and that's the start of the big mouth of the triangle. So what we're going to do here is we are going to do a strangle on this, but we're going to go further out in time than we usually do. Usually it's 60 to 90 days or so, but we're going to go out a bit further on that to give this plenty of time to move. You can see that we are touching the upper trend line here on the weekly chart, but pretty fascinating here. It looks like something is really getting ready to happen with gold. Now, it may take its time doing it, but it looks like the move is going to be substantial regardless of which direction it is. It would play that if the U.S. equities market, the S&P, continues down to that 261.8% level, that gold would break to the upside and follow along with what it already is showing in the daily chart. But the weekly chart may have a mind of its own. We'll have to wait and see how that plays out. But consolidation in the wave 5 on the big pattern, again, as I mentioned, but it looks like a breakout is getting ready to occur here in the not too distant future. So when we have triangles, we don't pick the direction. We let the market do that for us, and we'll see. But I just wanted to share with you that kind of plays along with what we've been saying, that there's some unsettling things that are out there. We still have the government shutdown, partial shutdown, I should say, here in the U.S., and that makes the news each and every day. So that gets you caught up. Again, Happy New Year, everybody, and we'll be back to talk to you again next week. Take care.